This is Andrew Stotz of Stotz Investment Research, looking at Malaysia, where valuation is above average, but growth is below average. I look at the countries across Asia by this four segments. So let's start with the GDP of the country. The first thing that we can see is GDP over the last 4 quarters was 5.07%. That's relatively fast for Asia. The main driver was private consumption. Private consumption was up 6.5%, and it accounts for 53% of GDP, meaning its contribution to the 5.07 was 3.45. The laggards was export, which contributed the least, basically nothing. Now, let's look at the background on the country and what's going on with the market. Unfortunately, the market has not performed as well as the rest of Asia. We can see the blue line is the performance relative. And so since March 2016, the country has been underperforming. GDP of the country is about $300 billion US. There's 31 million people in the country. The GDP per capita is about almost 10,000 US dollars, so not bad. Market cap is about 430 billion, which means 145% of GDP. Market volume is a relatively low 0.4 billion or 400 million US dollars, and there's about 917 companies listed on the stock exchange. Now, the consensus 2017 PE is above Asia ex-Japan, but pretty much in line with ASEAN peers at about 16%. Expected EPS growth, though, is well below. It's been low, and it's forecasted to be low. Now, we can see a forecast of about 7.4 for 2018, but remember that analysts, according to my research, shows that analysts are almost always optimistic. So we could expect, based upon this, a 2 or 3 or 4% growth over the next couple of years. Now let's look at our Stotz 4 elements, where we rank the country relative to other countries in Asia based upon our FVMR measure, which is fundamentals, valuation, momentum, and risk. All right, so the overall ranking we can see is a 3. 10 would be best. So it's relatively unattractive. Why? Well, fundamentals, low ROE, valuation, price to book is relatively cheap, and dividend yield is above average. Momentum, well, poor earnings growth and poor price momentum, as we've seen, has made Malaysia a laggard. The main good news is that the country's stock market has a low volatility compared to most in Asia, although many would wish it was a little bit higher and the market starts to go up. At some point, Malaysia may be attractive, but at this point, I would say not very. Now, let's look at the sector performance over the past 3 months. First thing is, let's understand the market. The financials account for 21% of the market, industrials 16%, consumer staples 11%. Now, the best sector in stock was the materials sector, up about 9%, and pressed metal aluminum holdings was up about 43%. The worst performing sector over the last 3 months was real estate, which is down about 4%, and Sunway was down about 45%. So there you have it. Get access to our other research and articles by joining our free newsletter at becomeabetterinvestor.net/join, and I will see you there.